Okay, I'll go ahead and get started. Welcome everybody to the Saturday webinar series. This one is about the new feature in EdgeRater, which is all about trend lines. So I want to just kind of talk about what they are, the different trend lines that are available in the program, how to put them onto a chart, and we'll probably look at doing some present day scanning for certain trend line things, potentially. We'll see how we get on. So I haven't really planned a lot of slides here. So it's going to be a lot of time spent in the program. I hope everyone's okay with that. Do have a couple of slides because I just wanted to, first of all, always show the disclaimer. And then secondly, a little title slide, what's new in the program. So the Trendlines feature is part of an ongoing set of pattern recognition features. And it's the first of the pattern recognition features to be implemented. So trend lines are fully implemented. There are two different types. We'll get into them as we go on. And then since we have a little bit of time at the beginning, I think just a very, very quick market review, because in the previous webinar that we did, I did talk about the Hindenburg omen at the very beginning. And so I think it's interesting to see what played out in the Hindenburg, in terms of the Hindenburg. So this is just very brief. And what I've got here is a chart of the SPY. It's the close price of SPY. It's on the log scale. And the red crosses are the Hindenburg omens. Whenever there's a Hindenburg, you'll see a red cross down here. So you can see all the times that they occur. They don't occur that frequently, but when they do occur, it's wise to pay attention to the market because there could be some kind of correction coming up. It doesn't always hold true, but you can see on this chart that in the end of 2015, there were three that appeared at the top there. That was very interesting because there was a bit of a correction just after that. Then you had a couple appear in this run up over here. Very interesting one just before this COVID sell-off. There's a couple that appeared here, and then we had the big COVID sell-off, and then the recovery. We didn't see another Hindenburg until at the very top of the market here. So they do tend to appear at tops, at market tops. So it's good to pay attention. So what happened last time in the last webinar, we saw a bunch of Hindenburgs appearing, and that's over on the very right-hand side of the chart. If you can see my arrow, my cursor. And since then, there have been a whole host more. And we did actually get some sort of sell-off that occurred in the last couple of weeks. And then since then, the SPY has pretty much recovered somewhat anyway, almost back to the tops again. So those Hindenburg omens were good to pay attention to. You could potentially tell that something was not quite right with the market. And we had that kind of a small sell-off, but nevertheless, it was a sell-off. And now this recovery. So in terms of the market summary, we tend to look at this because it's a collection of 10 different indexes in the market. And the color coding is quite nice because we get red colors in this %B group of columns when those indexes are in trouble. So when the indexes are at the lower end of their Bollinger Bands, we tend to get the red. We get the red, and if you get all of them are red, then we know that the market is going through some kind of trouble. And then what we look for is on the left-hand side, we look for the %B one-day changes to be over a certain value, and we hope to get a complete row of blue %B one-day changes, which then tends to lead to the %Bs going into the yellow territory, and then finally getting back into all green. So we haven't got back into all green yet because still the Russell 2000, that's IWM, and the IDX, which is the S&P 400 mid caps, are still trading around mid Bollinger Band level. So not quite plain sailing, but those two indexes also were the anomalies prior to the sell-off, because they were bucking the trend, if you like. While the SPY was coming down, the Russell 2000 and the S&P 400 were going higher. So they've got a little bit more to recover in order to get back to their peaks. So that's where we are. Potentially we're in a period where we start to go into this green area, and things become good again for the long side. But potentially, we did see a couple more Hindenburgs on the way out. So just pay attention. It's not. I don't think it's a slam dunk at the moment to be long. So with that said, that's my brief review of the markets. We can take a look at my chart of SPY here, just to kind of orient to what has happened. And on this chart of SPY, you can see when I was talking about this this sell-off we had we were at 565 in SPY mid-July, and then we had this turbulent time, and we came down to a low of 510, and then we've been trying to recover from that ever since, and almost back up to the highs. And this chart is interesting because it also leads nicely into my trend lines topic. Because as you can see on the chart, there are some trend lines. And let's go to a different chart. We'll just cycle through a few charts. I'll just show a few trend lines here, just to give you an idea of what we're going to be talking about. So I'll just go through these quite quickly. You can see the trend lines I'm talking about are drawn in EdgeRater on the right-hand side of the chart, always ending at the right-hand edge of the chart. Well, I say always, there are exceptions to that, which I'll talk about. But generally, it is the best drawn upper and lower, so both upper and lower line, between a set of bars. Daily bars or weekly bars could be, or monthly bars even. And there are two types of, so it's the best drawn line. So it's the line with the least error, essentially. Automated trend lines are very tricky, and in many implementations in software programs, you'll see different versions of trend lines, and trend lines drawn in different ways, and so there isn't really a standard way of doing this. But the way that EdgeRater does it, it's basically looking at the close prices of each bar, and then trying to find a line that has the least error when it's drawn, so that when you take into account all of the other bars, the error number is low. And it does that for the upper line and the lower line. And another condition is that there cannot be a close price outside of that trend line. So all of the bars that the trend line encompasses, if it's an upper line, their close prices all have to be lower than that upper line. And if it's a lower line, those close prices will have to be above the low line. So down here, you can see your eye might be drawn to this in LI, that this green bar seems to violate this lower trend line. But remember, it's the close price that we're talking about. So the close price actually is above this trend line. And so that is the best drawn trend line for LI, the one with the least error, lower trend line, and the red line is the best drawn upper trend line. So the two types of trend line we have are a fixed length line and an auto length line. So let me explain what they are. And you'll find trend lines if you look in the chart scripts, there's this new pattern recognition module. And in there we have the auto length and fixed length. So what I'll do is I'll remove the line from here, so we can just start fresh, and I'll drag on a fixed length trend line. And by default, the length of this line is set to 10 bars, and I can change the length to be however many I want. So it's always going to draw the line over that many bars, and trying to find the line with the least error, essentially. So as I go out and make this line longer, then it's just trying to find the best drawn line between all those data points. And that could be interesting for some studies that you're doing where you have a certain period of time that you're looking at and you're trying to find the best trend line essentially over that timeline. But in terms of actually being useful to pick out important price points over a variable number of bars, it's not that useful. So a more useful thing is what is called the auto length trend line. And so I'll show the auto length trend line. I'll just drag this onto the chart. Okay. So that's on there. At the moment, this doesn't look really any different to the fixed length because it just happens that in this case, LI auto inc, it just happens that it's worked out that the best drawn trend lines, the ones with the least amount of error in them, are the same length for the upper and lower and fairly short. And there are some parameters when you're using an auto trend line. So the first parameter is the minimum length of the line that you want to draw and the maximum length of the line. And the reason for that is sometimes, so you don't want to give the program the entire amount of data to go and try and find a best fit line. It can take an incredible amount of time to do a calculation over 10,000 data points to find the best fit line. And also, that's not necessarily useful if, depending on your trading period, you may be interested in shorter term trends or longer term trends. So you define basically a window of lengths, and then the program will go and figure out the best fit line over that window of lengths. And the upper line could be shorter or longer than the lower line, and vice versa. So as we increase, let's go and increase the minimum length here. So right now the minimum length is 10. If we increase this out to, let's say, as you'll see as we just increase this, that so by increasing the minimum length to 18, it still hasn't changed because obviously 18 was the number that it found between 10 and 100 of being the best fit. But now as we go past 18, we're saying 18, we don't want it to be 18 or less bars in length. We prefer it to be at least 20, 21 bars. Now the line's going to get drawn a little bit different. And now you can see as I go past 24, that the upper line now has a longer length than the lower line. And so then obviously we have to go a little further past the length that it's currently found in order to find better line. But there we go. It starts to draw these lines. So an interesting thing then to do, I hope that's understandable, the window, minimum, maximum length, and it will find the best fit line. And then there's a couple of other parameters too. The offset, which is how many bars from the end of the chart you want to end on. Essentially, you want the line to end on. So for instance, I'm looking at LI again, and if I say 1 bar from the end, this is the trend line as it would have appeared yesterday. And that's useful if you're looking for crosses above the trend line. So for instance, on Friday, you can see that LI crossed above the upper trend line. A couple more things to point out on this particular template too. So we can see, I'm looking at the chart layout, which comes with the straddle busting template, which contains a lot of information that you'll not see anywhere else in this template. And one of the key things that it's showing here is down here, the move that happened to push LI above the upper trend line was actually an unexpected move, meaning that the options were not priced for that move. And the straddle busting template is all about finding stocks or pointing out stocks where the price move was not expected by the pricing of options. And most of the time, options are priced very accurately so that uh, so they foretell the future of a stock, essentially. So when there are unexpected moves occurring, that gives you an extra piece of information that you can use to help you with trading. So that's something that appeared down here. Just remember that that area below the chart is not a volume area. It is just the amount of uh, unexpected move, essentially. If it's a green bar, it means that it was unexpected. If it's red bar, it means it was expected. And the higher the green bar, the more unexpected it was. The lower the red bar, um, it just means that price probably didn't move that much, and so the options actually collapsed in price. And anyone who was selling options probably made money in that time. So you could think of it like that, that there are sellers and buyers of options. If you're buying an option, you really want you really want an unexpected move because the option can really help you out. And so you're looking for the green bars, and if you're a seller of options, you're looking for the red bars are good for you. Okay, so that is the idea of the offset, is so that you can see what the trend line looked like yesterday or any number of bars prior, and how prices moved since then. And this is particularly useful if you just set it back one bar and you're looking at the price move above or below the upper or lower trend line today or at the end of the trading day, depending on how you're running it. Obviously, EdgeRater is an end-of-day program, but if you do have intraday data available through Thinkorswim, if you run the Thinkorswim platform on your desktop, then it will pull in the latest price. It knows the open price. It knows the high price that's achieved so far during the day, the low price, and then it says that the current price is the close price, and it forms a pseudo end-of-day bar using that information. So you can set it up like that. But mostly, people just use it with end-of-day data to see what has occurred in the market and what might be likely to occur on the next trading day to give you a group of stocks that you can put on your watch list to implement your strategies with on the following day. And I find it very useful I find this template extremely useful for that. What I will often do is I'll take right. So let me explain this this template a little bit more. So it's basically you've got the current day. So this is the day that just occurred. So this will be Friday, and then it goes back in number of days, and we've got 10 days altogether that it's looking back at. So current day, the stock with the most unexpected move was JD on Friday. Which had a 208% gain in the straddle. And that's what JD looked like on the chart. You can see the trend line here. If I go back a day on the trend line, set the offset to 1, you can see the best drawn trend line was a very short line. So it was kind of a short-term trend was in play at the time. But now, today, because the price has moved quite a lot, now a more longer-term trend is coming into play. And so, further out data points are markers that you can watch and pay attention to and implement trading strategies around. So, yeah, so we can go back 10 days. So what I like to do is take the list of the most unexpected moves. And so what I'll do is I'll just basically take probably the top 20. So from row 7 to row 27, 26. I'll take those. I'll Control C that to copy it to my clipboard. And then I'll go into my trading program, which is actually Thinkorswim. And then I'll create a watch list and paste them in there and just keep them open in Thinkorswim during the day to see if other moves are occurring. And I like to put them on intraday timeframes, like 5-minute charts in Thinkorswim. So I think that's an extremely useful thing to do, and I do that, and it is very useful. So the other thing I should say about this is the stocks that have made the most unexpected move today, or on the last end of day, so in this case it's Friday, they're not necessarily the most likely to make unexpected moves the next day. Often, and I don't have numbers around how often this happens, but what I have found out just by looking is it seems that when a large move, unexpected move has occurred, it takes a couple of days for that move to consolidate before more unexpected moves can happen. So that's that. So in that case, what I also like to do is to sort by 2 days ago unexpectedness, and then copy those 20 into my clipboard and put them into Think or Swim and monitor those, because they are, in my opinion, more likely to have unexpected moves than others. And what is also really important to look at, to give you a good idea of what's going on in the market on any one day, is the percentage of the busted percent. Essentially, how many straddles in this list, and I'm using my list of liquid options. That's like 250 stocks that have options. I'm looking at how many straddles were busted. What's the percent number of straddles that were busted, i.e., the number of unexpected moves. And this gives you an idea as to how volatile the market is, and how, just how unexpected things are happening in the market. So we go back 9 days ago, or 10 days ago, really. 80% of the stocks 10 days ago made unexpected moves. That is an extremely high number. I've been watching this for probably nearly a year now, this particular template. And the normal number that I've been seeing is around 30%. So 80% is extremely high. 12% is extremely low. But that goes into what I said before, that after a large move, there seems to be some consolidation. And so, you've got this 80% of stocks making unexpected moves. Then the next day, you've got 12% only. And then you're back to some sort of normality with 35%. But then it started going higher. And then volatility dried up. You got 20%. Then you got 43. 43 is quite high. 17, 55 2 days ago, 55% of stocks were making unexpected moves. And then Friday, 20%, which is actually quite low. So that's where we are. And I've gone off a bit on a tangent here from Trendlines, but I just want to point out this template because it really does provide you with some great opportunities, stocks that are likely to make unexpected moves. So let's go back to trend lines. There's a couple of other parameters to these trend lines. We've gone through min length and max length for the auto trend line. That's your window. And then we've gone through offsets. You can set offset to anything you like. So we can say, 5 days ago, this is what the trend line looked like. We've got the log scale. So that's an interesting one. By default, this is turned on. And what it means is when you're looking at the trend line, the software is picking out the line based on the logarithmic changes in the price, not on the actual price. And I find that setting to be way more interesting when you're looking at stocks that have had huge moves, because you're trying to get the percentage change per day and not necessarily the value change. So the more interesting thing is the percent change. You'll see as we go through some of these charts that the line does not look straight on some of them because we're using a logarithmic calculation. And then the other setting in here is whether or not to use an average error. So when it's calculating the best fit line, you can use basically a standard error or an average error of all the bars. And you can just play around with that and see which ones bit. So if I'm going to use like a standard error, you can see it's saying this is a trend line. It always seems to be a shorter line when you use a standard error. But when you're using the average error of all of the bars, the line tends to extend. They are the settings. There's quite a few, obviously, parameters here. And so it takes a little while to get used to them and what they are. The defaults are, as I showed with 10-100, 0 for the offset, using log scale all the time, and using average error. They're the defaults. You may not need to change those. When you're running the straddle busting template, the chart that's associated with straddle busting has been changed to include a trend line, the auto trend line with those default settings. So anytime you run this template, let's sort it by unexpected things on Friday. And let's just quickly go down through this list and see what was going on. So we have already been through that, right? We've been through LI and Alibaba, and we're looking at GDX, unexpected move. You can see the lower trend line here is quite long. So you've got these touch points here from this breakout level over here. It's created a lower line, like a support line, essentially. It's hit that several times. And now in the upper side of it, it's on a short-term trend going higher. I know it's shorter term because the line is short, essentially. So another advantage of trend lines over something like moving average is that they're dynamic. When you're talking about the auto lines, if you're using the fixed length trend line, that's not dynamic. It's always just based on a fixed length. But an auto length, it will actually look at the bars and figure out the best way to draw the line and how many bars are involved. And so they are dynamic and are very responsive to changes in price, as we'll see. Anyway, let's go down further. So I'll continue on. I might find something else to talk about here. Another interesting thing about trend lines is how they are related. The upper line, how is it related to the lower line? For instance, are they diverging? In this case, you have upper line going higher, and now you have the lower line going lower. Is that an interesting situation? Does that lead to, can we point out stocks that are now in interesting states and give good possibilities for entry? Likely reversal points or continuations, all those things. Can we detect that through converging or diverging trend lines? This is all research that can now be done with the trendline addition. So yes, let's look through some more here. You'll see here's an example. You can kind of begin to see here the log scale coming into play. So in WOOF, we've got the lower line, because WOOF, the high value was it was a $4.20 stock at one point, and now it's only $2.20, so it's half price essentially. But you can see the lower line is not straight. It's drawn with a looks like a curve, because this chart is not a log chart. We currently don't have log charts in EdgeRater, but the calculations are done using log scale. But when you plot that on a normal scale, you end up with this curved line. If I say don't use log, if I change that setting over here to say no log, you can see the lines straighten up a bit, which may be pleasing to the eye, but I think it's more useful to have this. Because you're really, when you're trading, you're not interested in actual value changes. You're interested in percentage changes when you're looking historically. Value changes are, if SPY is trading at $100 and it moves $5, that's it's 5%. But if it's trading at $500 and it moves $5, that's much less. Okay, so a log scale will be able to normalize that sort of information for you. Right, let's just go down through the list a bit more. We might find some interesting trend lines in here. Here's another one. which both the upper and lower are curved because of the log scale. And the Bitcoin ETF, BITO. Barrick Gold. This is a wide, so you can characterize stocks by these trend lines. And rather than using something like a moving average, which is slow to react, trend lines react very quickly. That's a big advantage. A problem with trend lines is that they get redrawn every single day. So you cannot expect, for instance, when I look at this chart on Monday of Barrick Gold, I might not even see that there was a trend line. The upper trend line is up here today. Because on Monday, there may be a new trend which is more interesting, and it will have picked out that new trend. But right now, the trend in place is this upper trend. Okay. With trend lines, it's really useful to be able to use the replay mode in the charting module in EdgeRater, because that way you can actually see without having to go to the offset to see what the trend line looked like yesterday. I can just put replay mode on, and then I can just quickly go through and day by day, essentially, and see what these see the trend line that was in place for that particular day. So as I go through gold, we can see how price is moving, and we can see how the trend lines are responding to price movement. So from one day to the next, it can be an extremely different look. You won't get that with a moving average or any other indicator that has that lag built in. So Trendline's extremely responsive and will alert you immediately to a change in situation, and use that in conjunction with the straddle busting template. You have something quite special there. Okay, so as Barrick Gold continues, we see the trend lines. Look, here's what's happening here. You've got diverging trend lines. Price is starting to come down. So you can see that the lower line is starting to nudge lower. And now price breaks down through that lower line. And now, we've widened out. We've gone through that from that more microscopic view to a wider zoom level. And this is all automated. The program has figured out that now in play, this is what's more interesting now. Forget those smaller moves. This is the more interesting trend line. Okay, one of the favorite things in my very not very long research into this, because trend lines are very new into the program, but one thing I think is quite interesting is converging trend lines, because converging trend lines cannot converge forever. At some point, price is going to move above or below the trend line, and it's going to it's going to change things. So I think these are very interesting converging trend lines, very interesting to look at in order to try and find interesting trades. So here's a converging trend line that occurred in Barrick Gold, and that was Friday 7/26. So we have some time, we have some more data. I can go forward here. Okay, so this converging trend line on Friday, on the Monday, this then became essentially a parallel trend line. So the lower line is now, instead of it being upsloping, it's now downsloping. That's the more interesting line the program is pointing out. Okay, but now it goes back to this upsloping line. So there's some changes in Barrick here, and now it breaks down through the lower line. So, but it's interesting. Use your replay mode and use the left and the right buttons just to see how the trend lines develop day by day. Let's just look at a few more. Here's quite a long line. This is lift. Again, because you'll find the lines will look curved normally on stocks that have lost or gained a lot of value. So that the higher price might be twice the low price or something like that. Then the lines will start to look a little curved. Lift is interesting here, I think, because you've got the prices coming up to this upper trend line. You have lots of unexpected moves that have occurred. You can see from below. You can see this line here, which is the sum. It's adding up the amount of unexpected moves, and that has been steadily increasing. And it's now, as of Friday, bounced off of the average. That's a moving average of unexpectedness, essentially. So yeah, it's interesting here at an upper trend line. I don't think you can say whether it's going to go higher or lower, but you can say this is a point of action where I think something more unexpected is likely to occur. Is more likely to occur than expectedness. And if you're talking about like how, the question would be, how can you make money on a situation like that, where you don't know if it's going to go higher or lower? Well, the answer could be a straddle. Okay, you can, if you buy a straddle, you can make money on unexpected moves. And then the other thing is, don't always look at straddles. You can look at just out of the money calls and puts. Okay, so we'll go down through a few more here. Here's another one that's come down quite low. Okay, let's take off replay mode. So we're seeing the entire data, just so we don't get confused. So you can see how the trend lines, they can be short, they can be long. The program's picking out the length and what trend is really in play. So here's a good one. I like this. I saw this on Thursday, actually. And yeah, so it came to my attention on Thursday. This is Airbnb with this trend line. What really brought it to my attention was not necessarily that it was bouncing off of this lower trend line, but that the straddles, which had turned around and started, there were more unexpected moves started to occur recently. So that was super interesting. And then on Friday, you had what looked like a small move down, and you might think nothing of that bar, but that bar can make you 41% in a at the money straddle. So that was an interesting potential play. This whole chart is actually quite interesting because it's showing you've got a lot of things going on here. You've got the trend lines, you've got earnings, super important to be aware of. You've got the whether there's been unexpected, whether straddles have been busted. You've got a sum of all of those, so adding up the amount of expectedness essentially, and you can see a trend of that. You've got the implied volatility of the next expiration, and always you'll see when you come into earnings, the implied volatility goes higher because there's so much you don't know what to expect. That's the definition of unexpectedness. And then it always drops off after earnings because then everybody knows the news and everything is expected at that point until you get into the next earnings and it starts to go higher. And then you have, so that's on the next expiration, which in weekly options is normally always a Friday, unless you're dealing with something like SPY or something that has more than one expiration during the week. But most of the regular stocks only have one expiration a week, and that's on a Friday. And then below that, we have the IV30, which is your regular, whenever anyone talks about implied volatility, normally they're talking about the 30-period implied volatility. So that's plotted down here. Always good to see. So you know if options are expensive or cheap. Right now in Airbnb, they are relatively cheap on the 30 days to expiration. And on the next expiration, which currently is next Friday, they're not as cheap as they have been, but still not too expensive. And then the area below that, the IV30 versus HV, is basically, is the implied volatility outperforming the historical volatility. So if you're in the red area here, it means that historical volatility is more than implied volatility. And so again, that's another situation where you could do well by being in options. So pay attention to Airbnb. That could be interesting. Also, it's a $116 stock, so there's plenty of room for it to move down or up. Okay. what else to talk about with trend lines? I mean, at the end of the day, it's just a line that's drawn across the highs or the lows of your chart. Um, if if I put a chart in front of you and said, draw me best trend line, we would get 100 different lines drawn. This is not subjective. It's very objective, and it's using the amount of error, which is a mathematical function that can be found, the amount of error between the line and all of the bars. So yeah, so that's trend lines. That's trend line. Any questions on trend lines? Because if there's, I can answer questions, take questions now, and then what I want to do is go through a couple of scans, show you how you can put a scan together to scan for a particular, actually specifically for converging trend lines. Okay, so Tom, can you add a second set of trend lines for a period look back? Show the lines from 2 days ago with lines extended to current day. So I think for most part, I can say yes to that. Let me, on here, I currently only have auto trend lines. So I could add another set of trend lines. Obviously, if I add auto trend lines, it's going to be the same unless I change my minimum and maximum length or offset, essentially. But I could add it and change the offset, or I could add a fixed length trend line. So not sure what you might do there. Maybe I'll show you both. I'll add the fixed length line in, and I'll set the fixed length to be, let's say I'm interested in 20 days. So now I've got the auto drawn lines and the fixed length lines. Maybe that's not what you meant. Maybe I'll just drag another set of auto lines on. And this time I'll set the offset to 2 bars ago, which I've done. And in this case, the lines were identical. Okay, so we know that those lines did not change. 3 bars ago so I'll just go back. So as I go back further and further in the offset, you can see the lines start to draw differently. What I prefer to do rather than putting on another set of lines, if all I'm trying to do is see what the lines looked like yesterday or the day before, is just use the replay mode. That's a much cleaner way of doing it. So I'll just go back several days in here and see how these lines changed. So there are certain investigations that I want to look at with in upcoming work in the program, because these lines, you can characterize a stock by a trend line. There's lots of different ways. Obviously, we've already talked about whether it's converging or diverging, whether they're parallel. What happens between one day and the next? In this case, Airbnb, we go from, say, Friday here. We can see we're at the lower trend line. We go then to Monday with the trend lines now nudged down. Yeah. So the slope of this line has changed. Boom. To be a bit more slopey downwards. So does that have any significance in terms of future expectations of price movements or of option pricing? So those are kinds of things that are ongoing, will be ongoing, upcoming. Right. Okay, I'll look at NVIDIA. Brock would like to look at NVIDIA. Let's do that. So we'll go back to over here. NVIDIA. Okay, NVIDIA. So we see earnings in NVIDIA are coming up on 8/28. So that's on Wednesday. The trend line for the best drawn trend lines, currently it's in this short-term move, just significant move higher short term. And then I guess we could just change the length. If we change it just to the minimum length to be 11 days, it's now saying that the best trend line to be drawn is here. And we can see that the price is now at the upper end of that range. So potentially me go back to 10. And then let's just use the replay mode. Yeah, so we came from here, which was Thursday. We were at the upper trend line on Thursday. I'll move on to Friday. Okay, Friday we went a bit higher, and now the program is saying now the calculation is that this move from the low is more significant than that higher move, and that's where we currently are. So yes, there is potential resistance here if you're talking about trend line resistance, but currently the move in NVIDIA is higher. In terms of for NVIDIA, in terms of whether options are a good play at the moment, you can see that options are not bad. There are some stocks where you'll look at this line here, which is the sum of the expected moves, and it's always negative. In those cases, buying those options is not a good idea because there's too much premium built into them. But in cases where it's positive and moving up, then yeah, options are not a bad choice. So yeah, there's option possibilities for NVIDIA here. Obviously, NVIDIA is in the news. It's one of the AI stocks and all that sort of thing. So no reason to not expect the unexpected with things like that. Okay. All right, let's get on to how can we write a script to find trend lines that are converging. So I've written this. This is in my script, so you can watch the replay here and pause and copy this to your own script area. But I'm just going to show you what it is. This is what the script looks like. Essentially, so there's a call into EdgeRater into the main core code for the pattern recognition. It's called Trendlines auto length. That gets you back the actual trend line. And then the trend line's got a bunch of parameters with it. One of them is the upper line, one's the lower line, and one's the upper slope and one's the lower slope. And so this event is basically just saying be true if the lower slope is greater than 0, i.e. the lower slope is sloping up, and the upper slope is less than 0. So upper slope is sloping down. I'm reversed on this screen, so it's a bit tricky. Okay, so that is a very simple script to detect converging trend lines with auto length. So you can copy that. I've got my min length, the default set to 10, my max length set to 100. Yeah, very, very simple for you to copy that and put it in your own scripts. All of these sorts of things will eventually make their way into system scripts, but for now, it is not. Okay, so what do I do with something like that? It's generating an event. So if I've got a script that's generating an event, I know that I can go to my entries and exits, and I can find my script over here, which is auto converging 10, 100, and just run this on my liquid options. Okay, and with trend lines, you should only pay attention to the very last day, because remember this line, it's drawn with respect to the very last bar of the chart. So these values are basically the lengths of the line. It's the same stock. So just pay attention to the last one, 8, 16, 24, and we can see that there were only 14 or so stocks in this list. These all had converging trend lines. Let's take a look at them. Converging trend lines, as I said, I think are more interesting because they cannot converge forever. At some point, they're going to have to break through that convergence. So yeah, we'll go through these. So we've got American Airlines with this strong resistance above, now rising up through this on this support. So it's going to come to a head at some point. And what happens there, we don't know yet. Amgen, again, converging trend lines. You've got a nice strong support down here, and you have resistance above. We've got Datadog. This has actually got to the point where it can't converge anymore. Something is going to happen here. If I take a look at my straddles, I can see they're negative. So straddles are not favorable for this particular stock. You see, the straddles tend to, over the long term, lose money here. So they're not favorable. So if you're thinking of buying options here, it's not necessarily the best thing to do. But something's going to happen here to make these trend lines either go up or down. You're going to get a breakout or breakdown probably on Monday. What else we've got? We've got Dell. We've got Fizzler, First Solar. I always remember that being called Fizzler. Again, converging trend lines. Converging, just about converging is lows. They look parallel, but slightly converging. I have not put any parameters in there to say how steep those convergences should be. You've got Lululemon, Macy's. It's in the middle here. So again, this is another case where you might say we're not at the support, we're not at resistance, we're in the middle, but it's moving. So it's got a ways to go before it gets to one of those levels. So can also make for interesting stocks to trade. And then we look down here. So there's a bunch here. So as you can see, this script is picking out the right things. A very simple script to pick those out. But it is only showing for the very last bar of the chart, which is 8:16, which is Friday. Because the trend line, it's only calculated for the very last bar. And that's a very important thing to remember. It's only calculated for the last bar. Now, it turns out that the calculation for auto trend lines, if you were to run it on an entire amount of data, for instance, 10,000 data points, for every single bar, figure out what the auto trend line is for that bar, it takes some time. I've done it, and you're looking at probably just for one stock, for instance, Microsoft, it can take 20 seconds to calculate what those trend lines looked like for every bar. So that's a very slow process and would be no good at running that on a bunch of stocks. It would just take too long. So anyway, just to say that trend lines are only drawn for the last bar. So what else can we do though in EdgeRater if we wanted to see other days information, trend lines that occurred, for instance, July 16th? What could we do? We could do something with a template. And I have an example. I've written this template here. I just took the template in from starter template. So I took a starter last bar template. And if I open my Excel here, yeah, so I took a starter last bar template and I just wrote, basically changed the template info, I changed the values, targeted that script that I showed you, the auto converging. I also have got a fixed length converging, targeted those and printed out a yes if they're converging and a blank if not. Did not associate any chart layouts, and I just called it trendline scan example. So it's a very simple template. When you write your own template, it will appear in the My Templates category, trendline scan example. And if I run this just on the Friday's data, we should get the exact list that we just looked at by running it in entries and exits, because we're only talking about Friday. So yeah, again, you've got AAL, Amgen, all the ones we talked about before. But then if you wanted to see what this looked like on any other day, you can go and run this for I said July 15th as a random, very random number, random day. And let's just try that. And now we can see converging trend lines. There are only two. BHP, put it in replay mode on the chart so we can see what it was like. That was a converging line, and UPS converging. So these were converging, but another parameter that I'm paying attention to in some research is how wide this gap is at the end. What percentage of the stock price is the width of this ending gap between the upper trend line and the lower trend line? This is quite wide. So, but anyway, because we have run this for a prior date and we're in replay mode, we can actually go and see what happened in these stocks. So as I play forward here, we can see we go back. I'm just going back to where we were. So this is where we started. Okay, converging line. Price is moving up for the last 3 bars, 4 bars. 1, 2, 3, 4. Yep. Now the upper line is moving higher. Okay, it's pushing the upper line higher. And now the lower line, there seems to be some sort of resistance. Now that upper line, okay, now we've got earnings. Earnings came into play here. And a massive sell-off down to the lower line. It's very interesting that, because even though the lower line really wasn't redrawn that much from one day to the next, but you can see the earnings, the price actually ended up right on that lower line. So that was a level that was drawn the prior day. So you might you might say that has some significance. But anyway, I think it gives you some kind of orientation to the market. Where do we get to? Here we are. Anyway, so yeah, so you can follow along, and that's what I really like to do with this, is use replay mode and go day by day and see how the trend lines are changing day by day. Yeah, so we have the templates. I gave you the scripts that you can run in your entries and exits tab. I wrote myself a template. I haven't given that to anybody, but when you look back through this video, you'll be able to easily put this together for yourself. And more information will be coming, more scripts will be coming with trend lines to be built into the pattern recognition area. And there will, of course, be a template to do with trend lines. To pick out converging trend line. At the moment, that's the one I've been focusing on, is converging, but there are many other scenarios to pay attention to as well. Like what happens to a trend line day to day? What's the width of that? If it's converging, what's the width of that ending piece? What's the width of the starting, where the trend line starts? That kind of thing. So yeah, all of that will be coming in a template. So I'll take a look at a few questions. Okay, Daniel. Yeah, significance is decided that the algorithm for the significance is not tunable other than whether to use an average error or not an average error. That's the only tunability there. Other than that, it's a mathematical calculation on how well the line fits, essentially. I give you like an idea of how it works is first of all, there will be a line which is your least squares line, your linear regression line. And then if you take that line and you push that line up for the upper trend line, and then adjust the slope of that line, and you make all of these adjustments until you get the lowest error of all of the data points in between, mathematical error that is, then you find the lowest error, and that's the slope of the line. And you do the same for the lower one. And then the other rule is that there can be no close price above the upper line or below the lower line in all of those data points. But no, there's no way to set a parameter for how that error is calculated, other than this, whether it's going to be an average of all of the bars or not an average of all the bars. And you can play around with that setting and see what kind of lines it gives you. So yeah. Phil, so for the scan example, are you able to run backtest as well? No. So Phil is talking about in here, when we did a scan, we put this script into the entries and exits tab and ran the script. But as I said, the script is not picking out all of the historical trend lines. You know, if you've got 10,000 sample days in a stock like Microsoft, it's not going through every single day and finding out what the trend line was on that day. It's only really finding out the trend line for the very last day. One of the reasons for that is just how slow it is to look through the whole data. Yeah, so as you can see, then you couldn't run this and do a back test because it's only picking out the current day. And if you want to pick out a prior day, then the template is the way to go. Create a template and set the start date, the run date of the template. Can you add a script to use specific start end dates rather than offset period? Okay. So let's look at my chart here. Specific chart start and end dates rather than offset period. Well, if you wanted to if you're saying what, maybe you're thinking what is the trend line between these two earnings events, for instance. There is actually a built-in function for that. It's not surfaced in any of the scripts at the moment, but in the software, you can actually call a function called trendline between events, and you can give it two events, which would be the earnings dates, and it can draw trend lines between earnings. So that's one way you can do that. Another way is you can play around with your minimum length and maximum length and offset. But I think you said rather than the offset period. Yes. Okay. But yeah, there's not a specific give a specific start date and a specific end date and draw a line and draw that line. Shashi, I was running in replay mode on SPY, and on 8:15 it pointed upward trend. How to make it respond faster? Okay, so all right, let me go to SPY, see if I can see what you do. So I'm on SPY, I'm not on SPY here. So SPY, choose symbol, SPY. Okay, SPY. Replay mode. Let's put replay mode on. Correct. SPY, and only on 8:15 it pointed upward trend. Yep, 8:15 is upward trend. Correct. That was 8:16. 8:15 is Thursday. Okay, so okay, I see what you're saying. So your point is it only started to say upward trend on 8:15, whereas the trend actually started a lot earlier. Now the reason for that is the minimum length of this auto line, which is 10. So all trend lines, when you have that setting, have to be at least 10 bars. If you change that to 2 bars and then go back, you'll see that move. But as you can see, a 2-bar trend line will only be basically, if you say the minimum length is 2 bars, the best fit line will always be between the last 2 bars. So that's not great. But you can set it to say 3 or 4, and then you'll see that change around here. So here's SPY on August the 7th. And on August the 8th, it's already changed from being a down, both upper and lower lines being down, to both upper and lower lines being up. You're welcome. Okay, Tom was asking, are you planning to create a version that updates in real time? Well, I mean, as I said at the beginning, EdgeRater is an end-of-day program, but you do have that ability to link with Thinkorswim. If you have Thinkorswim hooked up, it will update those trend lines in real time. Yeah, that's the only way to get it though, is to have the real-time data, and the only real-time provider of data at the moment is the link to which uses their Thinkorswim has a mechanism for hooking into their data, which is an Excel spreadsheet mechanism, and that's what EdgeRater uses to hook into that to get that data. Yeah, and it's pretty real time. I mean, the delay between the data point changing in Thinkorswim and it showing on a chart, it will actually show on the chart, um, less than a second for each of all the data points. So it's quite quick. It's because it's all on your desktop, right? And it's just a matter of EdgeRater then receiving a message. It's not going out to the internet. It's already gone to the internet to get the data for Thinkorswim, and then it just EdgeRater just hooks up with Thinkorswim on your desktop, transfer that data across. And what's interesting, so we're looking at SPY, and what's interesting in SPY is always, like, if you look at the number here, negative 67 over the lifetime. Well, I've only got 10 years of SPY in here, but you can see the expected, the straddles have always been overpriced in general. You've got periods when it pays to be long a straddle, but generally in SPY, it does not pay to be long a straddle. However, since let's see, the peak here, this is all not built into the pricing of the straddles. So yeah, since the peak, for instance, on 24th of July, that move was totally unexpected. That was a 236% gain in the straddle. So that is, when you're getting that kind of gain in the straddle, if you had a directional play in one of the options that wasn't a 0.5 delta, but was something less, you can be made, that could be like a 1,000% gain in one of those. But of course, you have to be right in direction and in time. Thank you. Okay, thanks. Thanks, Grant. Okay, no more questions. Well, that's it. Thanks all for attending. Hope you found something of interest with this. I highly recommend looking at this straddle busting template every single day. It is a great source of information for what's happening in the market, what stocks are of interest. And because you've got that 10 days of history, you can just easily go back and see, oh, what was happening 3 days ago that everyone else has forgot about now, because they're focused on the latest thing that happened yesterday. You can say, oh, 3 days ago, these things were of interest, and now they've kind of just gone off everyone's radar. But no, they're on your radar, and potential moves are coming up. All right. Thank you all for coming, and I will just say thank you for attending, and send me email if you have any questions about this, and we'll do another one soon. And we've got Henry, who has written a lot of the templates in the showcase, the customer showcase, has agreed to come on and do a little presentation with me. So I've got to talk with Henry about that to do that at some point in the future. So thank you, Henry, if you're online listening, and we will be in touch to schedule that one in. Okay, guys. All right. Thanks a lot. See you next time.